Hey everybody, today we're going to talk about some of the worst performing stocks in the recent market downturn. Before we do, please click subscribe to my channel to keep up with all of my latest investing and personal finance content. And check out the link on your screen for a message from our sponsor, The Motley Fool, where you can get the top 10 stocks to buy right now. So the first stock on the list is Pinterest, ticker symbol PINS. One of the largest positions in my portfolio. I first invested in Pinterest when during the initial COVID crash and have added to it several times since. It's down 76% from its all time high that it set in 2021. And to be fair, there are some good reasons. Its user base did decline over the past year or so, mainly because think about what's happened in the world. COVID restrictions have loosened dramatically. People have more time to go outside and stuff like that, and less time to browse on Pinterest. So it makes sense that the active user base has declined just a little bit. And there is a lot of uncertainty surrounding their e commerce pivot. Pinterest, if you're not familiar, recently brought in a brand new CEO. It's Bill Reddy. He used to essentially head e commerce at Google. So, pretty big hire there, but it's really unclear as to how Pinterest will be able to monetize it and what that's going to look like. But just to kind of give you an idea of what the numbers look like, Pinterest user base, as you can see, has declined a little bit. Last year, Pinterest had 454 million active users. Now they have 433. But the good news is it's stabilized. It bottomed out in the fourth quarter of 2021 at 431 million active users. And it's actually gained a little bit this year. So don't concern yourself too much with that. That's really the headline number that can distract you from the opportunity here. So here's really the highlight. This is Pinterest's average revenue per user. Overall, the average Pinterest user generated $1.54 in revenue for the company in the second quarter. Keep remember there are 433 million active users. But here's the real story. The US and Canada users generated $5.82 on average. In Europe, it was about one-sixth of that amount. In the rest of the world, Pinterest is essentially yet to really monetize its user base. And the kicker is that more than half of all Pinterest users are in this rest of the world category. So that's a huge opportunity, especially if Pinterest can figure out where e commerce fits into its business. And as you can see on the right hand side, these monetization figures are growing pretty impressively year over year. So even if the user base is staying constant, if you're increasing monetization by 20% year over year, you're still going to be in pretty good shape. So that's Pinterest. Next is Shopify, ticker symbol SHOP. Shopify is down 84% from the highs. And to be fair, the company made a mistake. They overhired during the past couple of years. Essentially, management felt that the COVID fueled e commerce surge was going to last forever. Um, E commerce has definitely died down a little bit. People are getting out to stores more than a lot of people thought they would. And Shopify was in the position of having to make some layoffs and really try to reposition its business for the e-commerce reality uh, in a less COVID fueled world. Um, However, Shopify does have some massive opportunities. The business is designed to grow with its customers. It's set up for anyone ranging from a startup making their first sale online all the way up to big public companies. And it's designed to grow with its customers over time. There's a massive e commerce opportunity ahead. Less than 15% of all retail sales in the United States are taking place through e commerce right now. And if you look at kind of the future plans here, so Shopify is trying to build out kind of its all-in-one platform. It's already offering payment services. Recently acquired a big shipping company. Shopify Capital makes small business loans and things like that. Shopify Plus is for larger businesses that need a little bit more service. And if you look at kind of what it wants to do over the medium term and the long term, international expansion, pretty much all of their business is domestic at this point. Retail POS, getting into actual brick and mortar retail stores, not just online shopping, installment payments, audiences, marketing tools. If you look at the longer term things, having a shop app, having its own fulfillment network to kind of bring logistics in house. So there's a lot of things that Shopify can do over the long term, and the long-term thesis is still intact, even though they kind of overshot the runway in 2020 and 2021 when it came to growth. So down 84% from the highs, this is one that I've been building a position in recently and plan to continue doing so. And last, the worst performer of the group is Lemonade, down 88% from the highs. Lemonade is an insurance company that aims to kind of disrupt the whole insurance industry. And to be fair, take that 88% decline with a big grain of salt. This is one of the stocks that definitely got caught up in the meme stock frenzy of 2020 and 2021. So it probably never should have gotten as high as it did based on its business results. The problem with Lemonade right now is it's losing money rapidly, very, very fast. It actually has more than a negative 100%, a negative gross margin, meaning that it's losing money faster than it's even making sales. Um, so the good news is management says that they expect the losses to peak in the third quarter. So we'll see those results in a few weeks. And to be able to eventually achieve profitability without having to raise any more money, which is a big concern among investors. And for good reason. It's not as easy to raise money right now in the current environment as it was a year or so ago. So here's kind of Lemonade's problem and potential all summed up in one slide. You can see on the right-hand side that growth is doing great. In the past 2 years, Lemonade's earned premiums have roughly tripled. That's in 2 years. And the big auto insurance rollout, which is the most exciting part of growth for that business, is really yet to be worked into those numbers. So big growth. They're doing a great job of executing in that department. What they're not doing that great of a job on yet is underwriting. They think they will have this under control, and that over time the current customers will be very profitable. But if you look at this 86% loss ratio, the company wants it to be 75% or less, and it was a couple years ago because insurance was generally made of its core products that have been around for a long time, specifically homeowners and renters insurance. As newer types of insurance get baked in, the loss ratio has gone up. That's concerned a lot of investors. And without getting really too deep into Lemonade's business model, because this is just a short discussion, um, Lemonade needs that to be 75% or less on an ongoing basis in order for this business model to work and be self sufficient. So we'll see over the next few quarters. And on that note, we will see over the next few quarters with all three of these. I'm going to be watching these earnings reports really closely because the third quarter has been a challenging one, the most challenging one to date of this current downturn. So I'll be watching these in the next couple weeks. All of these are likely to be volatile in the next year or until, for the foreseeable future, really. So keep that in mind when you're thinking about position sizes. I own all three of these. Pinterest is a relatively large position because it is, in my opinion, the least risky of the three in terms of how far down it could go. How it's already a pretty profitable company. Um, but keep your position. My position sizes in the other two are pretty small, and I'd suggest doing the same thing. So those are three stocks that have been beaten down, but that I still think are definitely worth a look. Once again, thank you so much for joining me. Be sure to click subscribe if you don't subscribe to my channel already. And as always, this video is sponsored by The Motley Fool. Be sure to visit www.fool.com/Frankel to receive the top 10 best stocks to buy now.